Hello, everybody. Welcome to episode 4 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka the Donkey Whisperer. And I'm here with my exquisite co-host, who goes by VWAP Trader on Twitter, who is known as the Gorilla of House Street in Vancouver, a man who is alleged to have thrown another man a record 10 feet as his days as a bouncer. I'm talking about JJ. JJ, how's it going, man?
Good, Ray. How you doing?
I'm doing great, man. I'm glad to be back and be doing this. And today, we're joined by our first guest ever on the pod. And before each podcast, I set the over-under line at 3.5 times I'll hear his name spoken by JJ. And that's how highly this guy is looked on upon. I'm talking about the co-founder of Shadow Trader, Peter Reznicek. How's it going? Hopefully I said your name right.
No doubt. You got it. Thank you.
Yes, Peter, thanks. Thanks a lot for joining us. We're excited to have you on here. Like I said in the introduction, JJ speaks very highly of you. I feel like I know a little bit about you already, but I'll let JJ kick it off from here.
All right.
Thanks, Ray. Peter, I'm very honored that you're on the show. I'm completely a huge fan and a disciple of Shadow Trader and Jim Dalton. Thank you very much for being here. I always say, who knows what darkness lies in the heart of price action, and it's Shadow Trader. And I was very, very pleased to interact with you and have you on the show today. Welcome. Thank you so much.
Thank you for having me.
And I started out as a retail trader a couple of years ago, and thankfully, before I blew up my account, I stumbled on to Shadow Trader, and I started watching your videos, and I saw these TPO profile charts, and they looked like alien hieroglyphics at first, and I couldn't figure out what you and Brad were talking about, your partner. And so I started diving into the videos and learning about it, and I was astounded at the depth of information you could get from these things. So I was wondering, how did you start trading retail, and a little bit about your journey that way?
Yeah, certainly. And when I tell you this, I want to also touch upon a little bit of what I call the Shadow Trader methodology, which actually predates the market profile by quite a ways. The market profile for me is a relatively newer phenomenon of, say, the last, 6 to 8 years or so, when I discovered Dalton's work and started visiting him in Chicago at a couple different seminars, et cetera. But, for me, I started trading around the year 2000, just as the bubble was bursting, as things were kind of cresting. Like everybody else, I didn't really understand intrinsically what was going on. I thought that it had to be a short even before it started, crashing, making the usual, mistakes that everybody does, thinking that there's gravity in the market and, et cetera, kind of trusting too much in the pattern. But everything really, I think everything that all the folks out there that follow Shadow Trader are really most thankful for, that at least of all the thousands of emails that I've gotten over all the years, is the simple methodology of the quad and understanding the interplay between the breadth and the advanced decline line. And originally it was the trend, and now we've moved to the ticks, and looking at the futures and looking at all that as if it was all one chart, or sort of as like a dashboard or a gauge to figure out a market direction. For me personally, when I started looking at all these different market internal charts and kind of putting them together and seeing, which ones were important and which ones could be discarded, that was really the turning point for me. And I'm very honored that over the years, this particular methodology that we've discussed in our Squawk Box for year after year, going on 13 years now, that this is really what's resonated with people the most, and as it should be, because really it is the crux of, the real truth, if there is such a thing, of what's going on, as opposed to being, pushed around by opinions or news, or just kind of blown around by the wind. When you have this, it would be like, it's like driving in front of a car and you have the gauges in front of you. It's undeniable whether you have a quarter tank of gas or not. It's undeniable that you're either doing 40 or you're doing 10, right?
So
Uh,
true.
so yeah, I mean, you have either engine lights flashing telling you something's wrong or they're not. So that's really the core of all that. And then when the profile came about, or I should say when I came upon it, it was obviously already a thing since the 80s, since Steidelmeyer. Um, that completely took everything to another level because it was like an overlay of another layer of depth, so to speak, of that extra facet of time put on that price and volume that I had never seen before. And it all just made so much sense because obviously the majority of the world lives in this two-dimensional realm of price and volume. And because they don't think about time, hence they don't have any concept of value. And that just blew me away when I started, delving deeper into Dalton's books and his teachings, and later on being personally mentored by him. It all just made perfect sense. So I'm glad that it's resonated, with so many people and with you as well, JJ.
It's because of what your insight. I mean, a little bit about myself. Without wasting too much time, I had a massive heart attack in 2012 and a quintuple bypass. So when I started trading retail, I would take a trade. And I'm a guy who can manipulate 30 stocks simultaneously. In the old days when I was, feeding order flow to market makers, my blood pressure and my heart rate would go up so much, even if I was in a winning trade. And then once I started looking at the insight that you provided, you know, my state would calm down. I was able to actually see the market and do things like stay out of chop, because the internals and profile would tell you, hey, just sit there and wait, things like an inside day, things like tick distribution, all those things, cumulative tick, which is a beautiful indicator. And I advise anybody who is on the Thinkorswim platform who trades ES to check out Peter's website and take advantage of that cumulative tick script. The other thing are the things like the breath bubbles on the internals chart. All of those things that you sort of added to the software with your team really, really helps. It helps you take a higher odds trade. It helps you, I find, stay out of choppy situations. And,
Mhm.
and for me, that extends my life 10, 15 years easy, you know?
No, that's great. It really does. I mean, it's really simplicity. It's actually, not making things more complicated, but going in the other direction and dealing with specifically what is, whereas opposed to a lot of more indicator based methodologies, it's really just derivative of price and volume, and I think it's lagging. It's kind of coming after. It's just sort of restating what's there in new and different ways. But the internals, and they're called that for a reason because they're inside the market, are things that are not revealed in the regular price and volume, really, right? They're not in the, even if you have the ES chart up, so obviously that's moving with the SPX cash, that is the market. But within that movement, you don't know what the breadth is, what the advancers versus decliners are, how the tick is acting. You don't see that unless you look at internals. And by the same token, you don't see how value is developing or where value is if you're just looking at that candle. So I feel like the market profile itself is really the fourth internal. It
Yes.
really is.
Yeah. I find, we hear a lot, I find trading in the retail sense is a lot about marketing now, with a lot of services and things like that. And, that's one thing I love about Shadow Trader is anything you charge for, it's not superfluous. It's intended to help traders, very quickly and immediately. There's no smoke and mirrors. Like you hear a lot about these, sort of order flow tools and things like that. And that's wonderful. But, uh, you know, the profile actually organizes order flow, and it's the most pure form of looking at order flow. And the internals, I find are just amazing because they give you that context. And how did you kind of put it all together, if you don't mind me asking?
the beginning of it was really just trial and error. As I was telling you, that I stumbled upon. I had always used eSignal from the beginning, and
Oh,
I stumbled upon their list of all the internals that you can get. Basically, if you've ever looked at some of these lists of symbols of internals, there's tons. From put call ratio to NYSE
oh
new
yeah.
highs, NYSE new lows, etc. Every index, every exchange rather, has all these different pieces of data that can be charted. And it was just a lot of trial and error for a few months of just seeing which ones worked and which ones didn't, and which ones I felt really gave you a window into the strength or weakness of what was happening intraday in the market, so that I could put it together with day trading. That was always my goal, is that it would assist in short-term trading, which is really, that's how you read it while the day is unfolding. And as time went on through this trial and error process, it just fell into those three, really. They just seemed to be the most robust. They always seemed to give the best signals. And so I just stayed with them. And like I was saying initially, I didn't think of the tick as important as I do now. And that may have been a mistake initially, but at the time, everybody was really looking at Trin. Trin was a big deal a long time ago.
Oh, okay.
And
Okay.
if you recall, with the advent of contra ETFs, the trend indicator became less and less valid, because there was volume, so to speak, going into an up stock, but it was a contra stock. Like we
That's
have
right.
these ETFs that if something goes down, the ETF goes up. And this is for, as folks who have money in a mutual fund or some other vehicle where they're not allowed to short. So they created these vehicles where these ETFs where they could buy a security and still benefit from downward price action. Well, over time, I think this was one of the things that really was to the Trin's detriment. This kind of threw the Trin off, and it didn't work as well as it did before the advent of those ETFs. So over time, then I started doing more research on ticks, and basically just shifted to the tick, and then the tick became the third wheel.
Okay. Okay, I understand that now. That's quite fascinating. I, Mr. Dalton talks about chunking of information, and one of the things that I noticed when I started trading ES was I would focus too much on the tick, or I'd focus too much on the breath, or I'd focus too much on one thing, and that chunking of information and putting it all into context with things like tempo. How long did it take you to kind of, like, from when you discovered this stuff to kind of meld it all together?
Do you mean like specifically with the profile?
Yeah, with the profile, and taking nuances from profile, and
Yeah. So
being able.
it's funny, JJ, that the profile itself, as we know, is a completely separate animal to everything else, and it's such a revolutionary way of looking at the market that I think of it as separate to everything else. So I can honestly say that for me has been an unfolding, constantly evolving evolution and improvement. Like I still to this day see new nuances, and I think like, okay, that's there's a number of different ways to read this. Dalton, his actual quote, I don't know if he uses the word chunking or not, but that is a pretty cool way to say it. But he always told me, he said, you just have to organize information better than the next guy. That's the job of the person who reads the profile. And this organization of information, I think, is it's like a never-ending quest for improvement. I don't know that you can ever get to any sort of mastery for it. So I mean, would I say, yeah, there's certainly times when you feel like, wow, it's all clicking and everything, certainly. But it's an ever evolving thing. It really is, in terms of what you're saying, in terms of putting it all together and seeing those nuances. I mean, basically what you have to do is you need to see the profile evolve in real time enough times that you begin to trust its signals, which obviously are not going to be perfect every time. But you need to see, for instance, enough poor lows or poor highs develop at the end of a day where finally you're like, you know what? I'm going to go out short X number of futures contracts or long, because the odds are so that, there's so much potential that we're going to trade higher or lower overnight because of what I'm seeing here. And then, that gives you confidence when you see it happening over a few times. You say, aha, okay, there's something here. It might not happen every time, but a confidence level builds because you've seen it play out. And as we know, there's 10 or 20 of those different nuances besides just poor highs and poor lows. There's lots of them that you can go on.
Oh, definitely. That reminds me of your video a couple of weeks ago. When we had that period of time where we had a lot of poor lows, or poor and weak lows. There was no excess, and you meant, and I was, during that week, I was looking at it going, something's going on here. It's like there's no follow through selling. There's no follow through selling. And during your weekly video on the weekend, you mentioned that too. And then, of course, the auction was the upside. So it's fascinating how that stuff comes together.
Yeah. No, most definitely. It's what it's almost like it's almost like knowing how to read what's not happening rather than what is happening. And that therein lies the big secret, I guess. Like, you know what I mean? Like what should be happening but isn't. I talk about that a lot in the pre-market perspective, because that's a concept that is certainly one of those that's evolved over time for me, where I try and trust it more and more. That I keep looking like, okay, like what is common sense telling me? What should be happening here? Like we know we're 100% net long overnight inventory. Okay, we should fade. Okay, well if we don't, obviously the sellers aren't there, right? So
exactly.
They're going to hold it.
And I think you're the only person now. I haven't had a whole lot of exposure to retail trading educators, but you're the only person I've heard say, okay, if this does not happen, what does that mean?
Right.
And to carry that forward, you don't hear those sorts of things, and that kind of puts a general context into a week or a month or a period of time that really helps you kind of see where people are trapped, or that sort of thing.
Yeah, exactly.
Um,
You have to carry forward that narrative, so to speak, and then when you carry forward that narrative, those pieces of information pile up and they become exponentially powerful because, like, you know what I mean. You have them in your mind. You're thinking the market should go down and it's not. Okay, that's one thing that I could get that from a two-dimensional chart, but then like you were saying, you look at the profile and you're like, poor low, poor low, poor low. Okay, what are they doing here? Like they're getting themselves backed into a corner, etc. Then you see whatever you notice that on, I don't know, I'm just saying 2 of those days there was no POC migration, right? We see that
exactly.
most of the volume traded up near value area high. Why aren't they committing more volume down near the lows? I don't know, but obviously they're not. So it all just kind of stacks up together.
Yeah, and what you said about how your knowledge evolves. And I'll let Ray get in some questions here too. I know I'm hogging all of this, but this is the first time I've ever spoken to you, and I'm like a huge fanboy. So, like the last couple of times we've had these massive gaps, and then they've sold down and filled, and like yesterday, the price action yesterday on that massive gap. The gap rules say go with the gap, but and then you see it fading and you have a gap and then you have a trend day down, so I guess those are kind of new things. I've seen that on the 20th and I saw that yesterday as well.
Yeah. I mean, in yesterday's, I'll be the first one to admit that I didn't think we would fill all the way. I had said in the pre-market writings that I felt that the odds would probably favor that, it would be a hard gap to fade. And it kind of was. I mean, it's the slow grind to the downside. It literally took the entire day to get there. It's usually difficult. But there's plenty of information to be gleaned from the fact that once it did fill the gap, look where it went. I mean, it literally bounced right on it. And I didn't make any money on the downside, but at that gap fill low, I was able to sell SPX puts that were literally almost at the money for $2, and they went to zero, and they literally had 55 minutes of expiry on them. But it was just it just made so much sense. I mean, there were 3 TPOs across. There was only one tick of excess. It literally went right to the gap, and I'm like, this is asymmetric opportunity. Like there's less than an hour left. These are $2. They're going to be zero in 20 minutes. And literally they were like 10 cents bid within 20 minutes. because the market just wasn't going lower at that point.
Yeah. And that was a beautiful thing. And the funny thing is, when I see a day like yesterday or the 20th, it reminds me of my old stock manipulator days, where you would gap a stock up so high and then the retail would just come for it.
Mm-hmm.
And you could just gently feather the selling and fill all those limit orders all the way down. And then, once you hit a certain level, you don't want to scare the retail too much. You want to fill them, but you want to keep the ducks hungry, so they keep coming back for more food. So then we take it up. So once the profile really helped me put my what we call X stop manipulator, paper hanger, sort of the agendas of what's going on.
Mm-hmm.
And that really helped. So I noticed that. That's
cool.
Yeah. I'm going to let Ray ask a couple of questions, because I don't want to. You there, Ray?
Yeah. I'm here. I was just letting you get that all out of your system, JJ. You little fanboyness. No. That's good stuff. Peter, I'm just a little. I'm interested in your background and how you got into trading. So how did you get into trading?
So I had always had a pretty healthy interest in markets and financial stuff like that. I actually traded a few stocks when I was, 12 or 13 years old, with in like a custodian account, and I used to subscribe to various publications at that time, like Wall Street Journal, Fortune, or whatever, things like that would talk about different companies. And obviously I didn't know anything about charts or technical analysis or anything at that point. I was just reading fundamental stuff. I just thought it was fascinating and whatnot. But I really didn't get seriously into it, like I said, until about probably just before the year 2000. As I had said in the interview that'll be coming out shortly, I guess concurrently with this podcast in like a week and a half or so, I was actually involved in the music business before the markets, and I spent about 8 to 10 years. I was living in Miami at the time, and there was a hip hop scene there that was really kind of growing, kind of coming out of nowhere. It was somewhat behind what was happening in New York City at the time, which made it exciting, because it was almost like it hadn't gotten there yet. So there was like really fertile ground for a lot of that to be started off. So I was doing all sorts of things in terms of promoting nightclubs and putting on concerts and recording some stuff too, and videos, and everything you can imagine. And I had originally obviously intended for that to just go on forever, but as you'll see in the interview, as I answered the questions in the interview, I was not able to make ever a go of it financially. It was just, it's a hard slog, because this was very far before the dawn of the internet and the avenues of promotion such as YouTube and, all that stuff didn't exist. So you were really kind of brick and mortaring the whole thing. You were literally physically pressing records. You were physically getting teams together on the street that were handing out flyers, teams that were wheat pasting posters up under bridges. You can imagine all that. It's really like in the trenches, you're doing it. So it just wasn't sustainable after a while. And then I started becoming a student of the markets, and really just kind of self-taught. But it took a long time, because I didn't really have any mentors. And it was just a lot of just self-study. I filled up tons of notebooks, just like looking at price action and taking printouts of charts and drawing lines. And, eventually you just little by little figure out what works and what doesn't. That's basically it.
Well, so Peter, you said you were self-taught. I mean, as far as going through that process, what resources, how long did it take you? Because obviously trading is not an easy thing, and this is most things, something that most people fail at. So what do you think separated you being self-taught, going through that process, than maybe others fail at?
Probably just stubbornness. Probably. That's really it. I mean, I think, the person who figures it out eventually is the one that just lasts. That's really it. I think a lot of people just quit. They quit too early before they figure it out. And a lot of times they have the mechanics down, but they can't get the psychology right, and that takes sometimes a little bit longer. So that kind of frustrates them because they're like, I know what should be happening, but I'm getting out too early or whatever the case, So I don't know, it's really just that you have to kind of put those two things together. You have to figure out the mechanics and get an edge or just pick an edge. There's 1,000 different things you can do, and then kind of get your head straight, and I've always had good discipline. That really never was an issue for me. I don't really have a gambling instinct in me. So I really, I never felt the urge to always be doing something. That's really not me. If anything, I tend to err in the other direction where it's like, I just, not enough setups intrigue me. So I'll just be dormant for a while. So I guess, I don't know, for lack of a better word, maybe my personality just kind of fits it, or I didn't fall into to a lot of the same traps that people have who maybe have those type of tendencies, where they're just a little bit, too ADD, or they want to take risks or whatever.
Yeah, absolutely. And so, Peter, how was so saying that, the music industry wasn't working out for you? I mean, how did you take it? How was the transition from that to trading? I had to imagine, you're experiencing some negative feelings. Just explain a little bit about that. Like, well, what made you persevere?
Yeah. So that was just really just kind of it had been a lot of years. I think it was like 9 years, I think, altogether. And at some point you just have to kind of cut your losses and just figure out like, okay, there are things going on here that are just working against me that I'm not going to be able to change. So that's something also that translates well into trading. Like when you have an idea and, you have a thesis and you think something's going to happen, but there's just things working against you that it's just not going to happen. Like it's kind of like shorting Tesla is a perfect example of that. There's just this constant short covering that seems to just like, it's just going to screw you every time because there's just too much short interest. I'm just pulling up an example. So it kind of flies in your face. And in the music business, when you're not capitalized properly, it's kind of the same thing in that you have a system there where there's labels and then there's distributors, and the people who are in charge of distributing the music, they will not take any risks in distributing that music unless there are huge like marketing budgets in place that sort of take the risk away from them and keep all the risk on you as the label, and because I wasn't capitalized properly, it was just really a simple decision at some point to just kind of fold up my tent and say, you know what, this is not ever going to work because you're never going to catch traction unless you align yourself with, some sort of interest that has a ton of money or whatever. So, it wasn't, I think at the end of it, it wasn't really as devastating as it would feel because, and I touched upon this in the interview, is that I thought it was really special in that a lot of people don't have that in their life because they go through their lives and then whatever, they become X age and they wish they had chased such and such dream, but they didn't because they were too busy kind of playing it safe. And so I figured, well, I was young at the time, like I'll just put my all into this. And if it doesn't work, I'll never have to say, what if, basically that's it. I knew that I gave it my all and whatnot. So, I was fine with it at the time.
Yeah, excellent. I mean, what strikes me from talking to you and and reading a little bit of the interview that has yet to be published is your mindset, and I believe people who are successful in trading, or from my experience, I'm a professional poker player. Like poker is like, the mindset is a lot of times probably more important than the actual like technical aspects of these endeavors, and that really stuck out to me. Your mindset. And you mentioned something in the interview, and I'm going to quote you, okay?
Yeah, sure.
You said emotional capital is far more important than financial capital.
Yeah.
Elaborate on that and what that means to you.
So firstly, as always, and I do this a lot and I'll never stop doing it, is, big shout out to Jim Dalton. Always give credit where credit is due. That's not my phrase, it's his. And I, unabashedly steal stuff, all the time. I mean, obviously, he's my mentor in the profile. So this is a phrase this is just one of like literally 100 phrases that I think he has said to me, or in a seminar where I saw him live, or on a phone call, where I just jotted down, like literally I have this file of like, I don't know, like 100 different, phrases and little snippets of conversation that he has said that have literally blown me away. And that was one of them. And, well, just think about it. I mean, it makes complete sense, Ray. I mean, if the emotional capital goes to zero, you can still have the other type of capital, but you're done. You're done. I mean, you could be at your high water mark for profits of the year, be cruising along or whatever. But if you're burnt, you're burnt. I mean, if you're just spent, you're going to make a mistake, and the emotional thing also comes more into play after like a string of like bad trades. Is that if you still have emotional capital in the tank, if you can kind of separate yourself from it and say, okay, so that was negative, that was negative, that was negative, but where am I mentally? Like, do I feel I still have edge? Yes. Do I still have confidence? Yes. I've made money in the past. I'll go back to making money again. Okay, so you just kind of work your way through that. That's all it is. All of that is emotional capital. You can see how, from a trader's standpoint, and I would probably think professional card playing has to be exactly the same thing, right?
Absolutely.
It's that confidence has to be there. That emotional capital has to be there. You have to feel like you have something in the tank mentally and in your heart that keeps it all going, because once, once that is gone, if that's depleted, you're already beat. You might still have whatever stack in front of you, but it's going to go to zero.
Yeah, absolutely. And I think that's something that, like, even to this day, I want to say like I struggle a lot with, but I think I'm a little opposite from you, because you say you have a little bit more of you can sit back, maybe relax, let the trade come to you, where I'm a little more like, let's say things are going bad for me, right? At poker the past week or 2 weeks, I want to just keep grinding. I want to keep playing. And when I think a lot of times, hey, maybe it's best for me to step back. Now, for yourself, how do you replenish your emotional capital? What's your go-tos?
You have to just stop for a little while. I think I mentioned this in the interview, but it definitely bears repeating. You have to stop for a little while, which could be anywhere from a day to a week. And then when you return, you should return in smaller size, because that smaller size, your head is clear and you just put a few wins together that are small. And then that really sort of, to me, that kind of replenishes it to me. Okay.
All right, cool. Yeah, and I got another question as far as the interview, and then I'll pass it off to JJ if he has anything left. I thought this was real interesting. You quoted, or you mentioned a story about a guy who was visiting a Buddhist monastery. You remember this?
Yeah, of course.
And I'm going to kind of quote the interaction and then go from there. So the guy shows up at the Buddhist monastery, and he asks what goes on around here. Then the monk replies, "We walk, we eat, and we sit." The guy replies, "That's it?" "Yes, but when we walk, we walk. When we eat, and when we sit. Now, you say to you, that's the secret of all of life."
Basically, yeah, I think so.
Yeah. So, and I find it very interesting. So when you say that's the secret, I mean, elaborate, what do you mean?
Basically that, that is, especially more so in the world we live in, which I think there are a lot of huge forces out there competing for our attention. I call it like the attention industrial complex. And that's really a thing. If you think about it, like you think of what business Facebook and others are in, they're in the attention business. That's really what they're selling. They're stealing your attention and monetizing it. But just beyond that, just from just a regular day to day, even if you're not looking at your phone a lot or whatever, or constantly looking at a screen, is the fact that, as human beings, I think we don't realize just how unpresent, so to speak, we are pretty much all the time, because we have so much going on, and that's just how our minds work. I don't want to get too deep into it, but it's like the way things are kind of set up in your head is that you have, like your own consciousness, and then you have all these kind of sub minds, and those sub minds are really noisy. but they're like noisy for a reason, because they help you. Because if the submind like wasn't working in the background, even if sometimes it's just chatter or whatever, like it's kind of telling you like, okay, you're about to cross the street, but like there are cars coming, so don't just walk out. You get what I'm saying? Like it's there, like it is, but it also, so that's the positive side of it, but there's also a negative side to it, in that there's this constant chatter and whatever. And I don't know, to sort of, make a very long story short, I think life is just a lot richer when we're present in the moment of what we're doing, and we're really, really focused with our attention on what we're doing in the moment, so that we truly enjoy it, and we're sort of maximizing our time here.
Yeah, no, absolutely. I really enjoyed reading your interview and that part as well, because that's something I've really tried to incorporate into my life the past couple of years. Is a lot of like the Buddhist principles of remaining present, and I think it could just really like you're saying, just enrich your life from all over, make you more productive, etc.
Yeah.
So I just wanted to ask you about that.
Yes, sir.
And I guess one more thing, and then I'll pass it off to JJ if he still has one more thing. You've mentioned being like fluid, right? In trading, and I take the same approach in poker, like not having like a fixed strat. Not I used to come in with like a fixed strategy, or like this is how I'm going to attack X player, this is how I'm going to attack him in this situation, etc.
Mm-hmm.
When in reality, I should be more fluid and let like the situation unfold and come to me as it presents itself. I gather that's how you go at trading. Now, how does one develop that type of mindset? How does one become fluid?
That's a really good question. I think that goes hand in hand with one of the earlier points that JJ was raising about, how do you put it all together with the profile, et cetera. And I was saying that there is no specific method and there is no mastery to it, that it's this constantly evolving thing. And the flow thing is really just kind of always being on watch, guarding yourself, so to speak, or against, getting too pigeonholed into a certain idea, or married to something, or thinking that a certain outcome has to happen. It's just kind of a different way of looking at things, meaning like, don't come thinking that like, I have to know exactly what's going to happen today in order to make money. You have to kind of come to each day fresh and think, well, okay, all I really need to know is that there are a finite number of scenarios that could play out. And I think because of what I see in my narrative profile, charts, et cetera, is telling me that there's probably higher odds of this scenario playing out. So I'm going to kind of focus on that. But at the same time, I'm not going to be, overly sized up, disappointed, aggressive, if it doesn't happen. I'm going to work hard to be careful and say, okay, this is the one as though I think is going to happen. This is how I'm going to play it. But Dalton always says monitor for continuation. So don't just go into something very aggressively and thinking that, well, because I had this idea from 2 days ago, I'm sure this is what's going to happen. So you go in like massive size, and then you don't monitor for continuation. You just kind of leave it alone because you're like, I'm right. I know I'm right. This has to happen. That's not being fluid. That's the opposite of fluidity. That's completely constricted thinking, where like you're really married to an idea and you're not even willing to see the outcome that it could be wrong, whatever. And then next thing you know, that turns into a huge debacle.
Mm-hmm. Yeah. And I'm gathering, these things just also, it comes with experience as well.
Of course.
Repeating. And okay, I know I said that was the last question. Last one, seriously. Being formerly in the music industry, involved in hip hop, give me maybe like 3 or 5 of your favorite hip hop artists.
That's a good one. So I've been very sour on kind of everything that's happened in recent years. Like I feel like all the time the list of like what I like gets smaller and smaller as time evolves. I came up in what I consider to be, or not just myself, but a lot of people call it the golden age. And people look at that from different time periods. Some people think that it extends all the way out into the early 90s. I always disagree with that. I always thought it was strictly 85 to 89. And so I love everything from that era very much, which would be like all the early groups that were first on Def Jam, such as Slick Ricky, PMD, Public Enemy, et cetera, from that time period. But like lately, as far as like more modern, I would have to say Run the Jewels, definitely. Pusha T is amazing. I was really happy to see him get a Grammy nomination. And Nas, definitely, who kind of spans both eras. I mean, he kind of started after the golden age, like early 90s. So
Yeah.
I would say those right there.
Yeah, good list. Yeah, Nas is definitely one of my personal favorites. But yeah, I mean, yeah, that's it for me. JJ, anything else?
I was brought out of a cave, and I don't know much about modern pop culture, but I do remember the 80s and the 90s. I was a big Public Enemy fan, so that's pretty cool.
Yeah, they're amazing.
It's funny because when I listen to Brad all the time, I got Thinkorswim for two reasons: one, to have the internals, and the other, to listen to your show. It's funny because I think, I'm 50, Brad's, I think, the same age. So his references to movies and music are very similar to mine.
Right.
So, I'll always email him. He'll play something, and I'm like, oh my God, I haven't heard that in such a long time. Thank you for playing it, And so I always find that pretty interesting. I was wondering, because you've been trading retail since 2000. I've only been doing it for a couple of years, but I have noticed that the markets have changed quite drastically, especially with not so much algorithmic based trading but these huge money managers like BlackRock and things like that in the markets. And the other thing is trading in the time of Twitter, when you have a president who tweets things, and then the market just reacts quite violently because these algorithms pick up on these tweets.
Yep.
And will automatically trade a certain way. How are you finding that? I mean, I noticed because we use profile, it gives us, and the internals, it kind of gives us an edge to know, okay, maybe we should just sit back and, this price spike might be retraced because it's bad structure. But are you finding, that the price action is different these days?
Yeah, I think it's changed a lot, because certainly there's kind of like three eras, if you think about it, in the markets. There's the first era pre the internet, which was defined by information moving very slow. Maybe there's even like four eras, because we could think of the first one as like the one in, I always think about the story in Reminiscence of a Stock Operator, which to this day is still the best book about trading ever written. And if you recall, there's that one story in there where he has this hunch that, he needs to short, I believe it was railroad stocks, because he knows that there was an earthquake somewhere on the West Coast or something. And he literally even says, like, and then the stocks weren't falling, right? Basically, like, he shorts upon hearing this news, and the stocks weren't falling. And I guess his buddy is like, this is not a good idea or whatever. And he literally says, like, it'll take like a week before we know the extent of the damage to the physical damage to the rails and whatever. And I think about that all the time. Like, that is incredible. And then he was right. Like, literally like a week later, when the reports start coming in, like, oh, this is going to cost us $100 million to fix, and the stock starts trading. It's amazing, right? Because where was the news coming from? Just newspaper? I don't know. I mean, Pony Express, whatever. I don't know.
Western Union.
Yeah, Western Union. I mean, on horseback across the country, like, whatever, So
that's true. That's
it's amazing. Right? So that's one era, and then the second era is once you have like the advent of telephone and TV and whatever, and so it's a little bit faster, but you're still paying a $75 commission to E.F. Hutton or whomever on the other end, and it takes 3 days to get a confirmation, and you don't even know what price you were filled at until 3 days later, right? And they send you something in the mail, I guess, saying
exactly.
Yeah, so that's the second era, and then the third era would be the dawn of the internet, and that's when things kind of hockey sticked in terms of the flow of information went much faster. Due to things being put out in chat rooms or live feeds or whatever. And then I would say the fourth era is like what you touched upon, which is social media, because things are even faster. And specifically what you said, that you could connect connect algorithms to trawl social media, not even just like on a certain tweet, but they've got algos that are just trawling it and looking for
Exactly.
keywords and putting those keywords together and buying and selling accordingly.
Yeah,
It's crazy.
I find that.
It's definitely changed a lot. And one last thing I just want to interject also, if I can, is that
Go ahead, please do.
I think that a huge change also has been the actions of the central bank and the market's sort of dependence on that. Everything that was happening as the bubble that led into 2008 was building. To me, that's all dependent on that. And I don't know, it's almost like we can't seem to get away from that dynamic. Like, I just feel like that's like the defining thing all the time.
That's true. That really that rings true to me, because I've got a buddy of mine, and we've got this tiny trading room, and his name is Odds, and he is a disciple of Mr. Dalton. He is like one of the most pure structural profile traders you'll meet. Like, if he and I look at Mr. Dalton like a god. So we'll be sitting there and we'll look at the structure of this market, and we're like, oh my god, this is like a house built on stilts.
Yeah.
You just look at it and you're like, wow, do people even look at the companies anymore? Now, like, we're taking companies public that call themselves unicorns. I mean, could you imagine going to JP Morgan in the day and saying, sir, I'm going to take this company public and it's a unicorn and it loses $2 billion a year?
Right.
He would hit you with his cane,
Yeah. Like, why is that? Why did that at some point become okay when it would have been ludicrous like a long time ago? Like, I think it's still kind of ludicrous. Like, I know it's like kind of antiquated thinking, and I totally understand that everything in the market is pricing, forward pricing, but like, and so again, maybe this is just like naivete, or it's just how I would do things, but I wouldn't take my company public unless it was profitable. I just wouldn't. Maybe that's just me, and that's probably stupid, but I'm just saying, like, that to me is how things should work.
Exactly.
Like, it doesn't have any value if it's not making any money. So why would I ask people to buy shares in it?
Exactly. And we toss around a word like unicorn, which is a mythical character, and we're bringing that into the world of finance. So it's kind of, it kind of puts my brain into kind of a spin. Like, This doesn't make any sense.
Like, if you're just burning through other people's money, like, I have a serious problem with that. I always have. That really kind of just drives me nuts. Like, literally, like, they will just claim that it's so viable, but viability is only judged by profitability. If it doesn't make money, then it's actually not viable. It's actually just an idea. And the only reason that you're still, that it's actually working is because some venture capitalist, some venture capital company or companies have taken a flyer on it and have seeded you with hundreds of millions of dollars for you to, hire all those people and have that fancy building and et cetera. But that doesn't mean it works.
And I think a lot of people forget. I mean, a lot of new traders, because I like dealing with people who are just coming into the market, and they don't even know that the market and these IPOs there are an exit strategy for the people who bought in.
Totally.
You're buying their cheap paper.
Totally. They were in long before the IPO at a valuation of like nothing. And when it opens at 30, I mean, there's billionaires created overnight, of course.
Yeah. And
way before
it's
that.
Nice. It's really nice to have somebody, who is in on this sort of, to weigh in on this, because I just seem it's, I think Greenspan said irrational exuberance, and I think we've gotten past that now, even,
Yeah.
It's pretty interesting.
Yeah. I mean, a lot of it, don't you think, just comes also from the fact that there's just more money now, in the system, and there's more money, and hence more deals. It has to go somewhere. So obviously,
Exactly.
And for every maybe one Amazon or Google or whatever, if you have 5 or 6 duds, that's fine, because that's the business model. Because the couple good ones, it'll be 20x, right?
Exactly.
So if you lose 1 or 2x on the losers, well, I guess that's the model. But that's the model for them. But that's not the model for the average investor. You see, they really get hurt, because for them it's not a 30x on the win, because they get in on day one when the stock is opening at $30, $40, $60 or whatever. So, at that moment when the bell rings and it comes out, that's a day of, 20, 30, 40 times money for the people that got in at a valuation of almost nothing, but not for the person who's buying it on day one. They're taking immense risk.
Oh, exactly. Exactly. I mean, I'll watch those prints like Uber and Lyft and things, and I'll look at that opening print, and as an ex-paper hanger, I'll sit there and I'll go, "Oh my God, I wish I was a part of that sell." You know, you know. Um, the one thing that I wanted to touch upon, because we've had something quite interesting happen at the CME with the invention of the micro contract.
Mm-hmm.
And because I come from the penny stock world, I worked my way up through the sewers of the penny stock world. And a lot of people I talk to, they younger people and new traders, because they have smaller accounts, they'll go into the penny stock world, and because the micro has come out, the barrier to entry into this market has become a lot less. Mr. Dalton always says there's no junior stock market, but now there kind of is, because if you have a bad day in the micro, you lose $50,
Right.
right? And what I wanted, I'd like you to touch on that, and I just want to say that all those new traders out there listening who are thinking about burning your money in the penny stock world, learn how to trade the micro, go to Shadow Trader and learn how to trade structure and internals, because you can apply that to like the baby ES.
Yeah, I agree. I think anything that opens the door to more people being able to participate in the market is a positive thing. I agree with you. It's great, and certainly it has the same low barrier to entry as penny stocks or even forex. But I agree with you; it makes a lot more sense, right? As opposed to, say, a penny stock. I mean, you're trading something that actually has intrinsic real value. It's the S&P 500. It's not like you're buying some stock that's 60 cents a share that really should be zero.
Well, and that's exactly it, because you're buying stock at 60 cents a share. There's a guy like me who's, dumping 300 million shares of this garbage that my clients got at 0.0001 cent,
Right.
right? And it's just dilution, right? We're just bringing you in to slaughter you. Whereas the ES and the micro it's a real market,
Yeah.
right? You know,
No, most definitely. Well, so it's exciting. I look forward to more people coming into it, and to touch upon what you were saying. I think certainly the reading of the profile and understanding that is paramount to that, and I hope that that more people take advantage of that.
Yeah, and I would urge everyone, who's thinking of starting trading, who's listening to this, or people who are trading and losing money, and and playing these low float situations and things like that. Please go take a look at Shadow Trader. Look at the information that he has and his team. They've done such an amazing job over the years. Look at their YouTube videos. They have I think a 3-part basic on, or a 5-part basic on learning profile, and it really would behoove you. It really makes sense to go check this out, because Peter and the crew will take you to the promised land. I can definitely say profile has done so much for me, and the internals, and you and Mr. Dalton. I mean, I'm much calmer. My life is better. I even met my girlfriend because of profile, because she's learning how to trade it, and I'm kind of teaching her. So
That's
you know,
fantastic. Fantastic.
you know,
Shadow Trader bringing people together.
it's a beautiful thing.
It's a beautiful thing.
It's beautiful.
I always joke with people about I have a new individual in my office that's handling some marketing stuff for us, and I joke about the pre-market perspective, which is the report that I write every morning about the profile. And I always say, we need to market this and say it will change your life. And she's like, how's this going to change your life? Well, like, trust me, this is going to change your life.
It
Let's
is.
just say that.
It is. I tell you, I mean, it dropped my blood pressure. I can sleep at night,
Yeah,
and I met the love of my life. I mean, what more could a man ask for?
exactly. It's working. There you go. There you go.
Well, Ray, what do you say?
Well, I say that's great, man. So what you're telling us is that if you subscribe, you go to Shadow Trader, you're gonna be able to meet a woman as well. Is that what I'm hearing?
You never know.
All right, so be open to the idea. All right, so is that are we looking to wrap it up, JJ? Anything else for Peter?
I think I've asked as much as I can. I've been waiting for this opportunity to talk to him for 2.5, 3 years, and I'm so grateful and so blessed that he's been on our show, and I'm very grateful and blessed that him and Mr. Dalton have both shared so much of their insight, and without asking for a thing. Please go and look at both of their products. I mean, I can't say enough. I mean, I would build a statue to Mr. Dalton for sure. That's how much I revere him. And Peter, I cannot say enough good things about how he has changed my entire outlook.
I keep telling you, JJ, I'm still looking to hire you as my publicist.
Anytime. For you, Peter, I'll work for free. Peter, I owe you so much, Peter. I will work for free.
You sell me so much better than I can ever sell me. I'm not that good at that side of the business. But I do appreciate it, JJ. Thank you so much. It really does mean a lot to me. I feel like anytime that the stuff that I've worked on over the years resonates with anybody. I have thousands of emails to that effect, and it really does matter to me. I just think it's phenomenal. I just always want people to understand that there's no like mastery to this game. Nobody can really say that they're like a guru of anything. It's just you just find things that resonate with you. You find things that work, and you spend literally the rest of your life fine tuning those things, because the market is constantly changing. You're constantly changing. You will always have these fluctuations in your emotional capital, etc., your emotions as they are. No two situations are alike, all of that. So it's just an ongoing process. And I feel truly blessed that I'm able to share my process with people. And that, over the years, it's garnered, somewhat of a following, and people are interested. So it's great.
Yeah, definitely, Peter. And luckily for all of us, your hip hop music career didn't pan out.
Exactly.
We really, we really appreciate you joining us today. It's been a pleasure talking to you. Learned a lot. Now, for people out there who want to learn more from you, maybe get in touch with you, where can they do that at?
Yeah, without a doubt, check me out on our site, which is at shadowtrader.net. And we have a ton of free resources there. Most of it is, if you have a Thinkorswim account, you can certainly listen to our show every day. Brad Agunis, my colleague, runs that every day. This is a Squawk Box that I started about 13 years ago. We were the first outside vendor ever to be embedded inside of a Thinkorswim platform. Now there's a few of them, but we were the first, the original chat room that's in there, and we continue to do it to this day with a lot of listeners. And that really is the core of my methodology. As it came together, I started presenting it there, and we continue to present that daily. And then beyond that, like I said, there's a few things on our site that are outside of that. Most namely the report that I write every morning, the Peter's Pre-Market Perspective, which is basically what JJ was touching upon during this interview. That's my musings on market profile, my key levels and scenarios of every single morning of how I think the market may play out that day, given what the profile is telling me and what my narrative is. So you can check that out there as well. It's all at shadowtrader.net.
All right, great. All right, with that, we'll wrap it up for JJ, for Peter, and for myself, Ray. That's the podcast. Thanks, everyone, for listening in. JJ, Peter, thanks for joining me, guys. Have a good one.
Thank you.
All righty.